You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 13th day of November, 2019. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you find yourself out of the office or away from your desktop, not to worry, point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Okay, and it's also my anniversary. Hang on. Alexa, 2019 minus 1983.
2019 minus 1,983 is 36.
Thank you.
Of course.
Third.
Enjoy the sunshine.
Hey, you too, kid. 36 years. Same woman, right? You know, lots of people have been married 36 years, just not always to the same person, but God is good. It's still possible. Okay, let's get a chart up here. We'll talk about it. Let's go with our 4-hour S&P 500 Emini chart. 4-hour chart, complete with monthly trading zones for your consideration. First day of the month, November 1st, we spike, or we slice, better term, we slice through the first monthly trading zone in history. This is the first time price ever touched a monthly trading zone because we never published them until now. We pull back whenever we slice through a zone. In other words, it failed to be good resistance. Well, we then expect it to be good support. The price pulls back, confirms that for us, good support, takes us to the zone overhead where we consolidated we consolidated basically from November the 4th at 6 a.m. Eastern until 2200 hours on November the 6th. And then in one 30-minute candle, or one 4-hour candle, we made it all the way up to the zone overhead. Good resistance, sent us back down to good support, which sent us back up to good resistance, which sent us back down to good support, to good resistance, to good support, and now we're back at that zone 3090/3095. If we take out this swing high and hold on a minor pullback, perhaps even on a smaller time frame, we will then set our sights on the zone overhead, 3140/3145. Okay? Any questions? If you have questions, put them in the chat box. We'll be happy to get those answered for you. Let's take a look at today's price movement. We'll stop in on a daily chart for starters. Right here. We're still in that little rectangle we drew last week. We've now been at it for 1, 2, 3, 4, 5, 6, basically 7 trading sessions. This rectangle is important only for this reason, and I won't even say that it's important. It's just a thing. All-time historic swing high. All-time historic swing high. The distance between here and here, I measured the distance, and it allowed me to draw this little rectangle before price got there. I think we did it back on this day here. That's when we drew it, or maybe even this day. Price found it, as price does. You know, anyone that tells you support and resistance is broken, but please don't just take them at face value. At least prove to yourself whether it's dead or alive. I promise you, if you put forth the effort, if you study the matter, you're going to quickly come to the understanding that price has always traded between support and resistance. To support, to resistance. Now, along the journey, support gets broken, which leads to a new level of support, which typically generates a new level of resistance. And you just got to follow the bouncing ball. Okay. Let's go to a 30-minute. We'll take those off for a moment. It would appear that the markets have not found any issue with Jerome Powell's testimony so far today. He's in part 2, the Q&A session. Yesterday, we had said to consider 3095 to 3097 here on the radio program. Now, I would have said that probably, show starts at noon, so maybe it was this candle here or here, because 30.95 is right. Well, that's 30, the high of that candle is 30.96. So it could have been in the opening 30 minutes or the second 30 minutes. We did go from 30.95 up to a swing high of 30.97.75. In fact, this high right here, that was the obstacle in the path that we were looking for. And that obstacle did its job. It acted as resistance. It sent price back down to good support. Good support sent it back up to what? Nothing? Air? Well, not so quick. We do have this support becoming resistance, but is there more to the story? Let's see. When we approach the BBC from below, we expect it to be good resistance until it isn't, but it was. So we hit not only an area that we would expect to potentially be good resistance based on a previous swing low. We also run into the BBC. We also run into red and falling. So you have three things there coming together. And on top of that, you get a bearish cross right on that candle. That sends price back to support. We spike it. We do some consolidation just below the zone. We make another run at that BBC. Again, it acts as good resistance. It sends us to the zone below. If I'm not mistaken, I updated this zone last night while I was doing some work. So that's a last week zone. This is a this week zone. Let me just go ahead and fix this one. And I'll be on the same page. Oh no, I already did fix that one. 85, 86. So 70, 677, 85, 86. Yes, I've already fixed those both. So from resistance to support. And this time we didn't spike it. These are 30-minute candles. We consolidated here. If you drop to a smaller time frame, perhaps a 5-minute. Oh, this says 5 minutes. I was using it as a 5-minute last night, but it's not a 5-minute right now. But maybe I'm going to leave it there. No, I don't need to. Let me just make it a 30. There we go. Okay. So as we rally back up to this weekly trading zone, we get above it. Notice on the next candle, we hold it on a pullback. That might not look like a pullback, but if you go to a smaller time frame, remember these are 30-minute candles, so you have 6 5-minute candles inside of a 30-minute candle. So in fact, price did from 30, closing price of this candle, or the high of this candle, 30.88.5. We pulled back into the zone, looks like 30.85.5, and now we've launched a rally up to 30.93.5. And this week's zone lies just overhead at 95.96. You may have noticed this week's zones are pretty narrow. Don't have a lot of distance between them. The market has also, and this is part of that story, the market has not been able to put together any or very few extended moves so far this week and into the latter part of last week. Was the last time you saw me draw a chart where I said, okay, we got an extended move, here's the initial target, here's the extended target, and here's the exit signal. It's been a minute because the price has been able to make those type of long-term commitments because of the big picture dynamic we have going on right now. And this is the high-level battle at the top. What it comes down to, of course, is order flow. And order flow comes down to who's more committed to their position, buyers or sellers. We'll find out. So as we approach this zone, we expect it to be good resistance, till it isn't. Let's go to the numbers from around the world. When I come back, I'll pick up right here. We'll go through the Concierge Trade Alerts. We'll look at Logic 247. We'll talk to John. We'll answer your questions. Maybe I'll give Garrett a jingle and see if he's going to make his Wednesday appearance today. Okay. Okay. Numbers. Here we go. Oh, by the way, if you own any BNB or NEO, they seem to be stealing the limelight at the moment from Bitcoin. Also, ETH. Bitcoin price continues its daily trading pattern, hovering just under 18,800 after losing support at 9,000, round number. Data from Coin360 showed another lackluster day yesterday for Bitcoin USD, with little progress over the past 12 to 24 hours. The week began with Bitcoin losing its foothold higher up, exiting a trading corridor or channel between 9,000 and 9,500, and so far it hasn't reclaimed it. Analysts remain broadly bullish on longer-term market prospects. However, the short term could produce further downside, which we see as a buying opportunity. The overall trend is down. Volume is still bearish. It's certainly a look to hedge short play going into the close. Michael Van de Poop, and I promise you that really is his name, had previously added that Bitcoin USD could dip to 8,400 if bullish signals remain evasive. As noted, that figure would be just $100 off the average price of Bitcoin for the year 2019. Nonetheless, traders could feel the fatigue today, and the weekly performance showing a 6% loss, despite remaining 5% up overall versus the same time last month. Van de Poop had argued that such ranging price behavior in itself does not constitute a bearish sign. In the altcoin market, some assets broke out of their sideways pattern to deliver noticeable gains yesterday. Out of the top 20 cryptos by market cap, NEO, N-E-O, and the Binance coin, BNB, were clear winners on the day, achieving gains of 13.1% and 6.5% respectively. NEO was building on the upward momentum which had characterized the token in recent days. Ethereum, ETH, the largest altcoin, increased by just over 1% to $187.70. In its heyday, ETH traded over $800 per token. All right, now to the numbers. Starting here in the US of A, these are the cash markets. Currently, the Dow up 54 points, NASDAQ up 7, S&P 500 up 3, Russell 2000 down 5. In the commodity basket, crude oil up 41 cents, trading 57.21 last. Gold up $8.10, trading 1461.80 last. In the Asian markets, at the close, Nikkei down 200 points, Shanghai down 9.5, Hang Seng down 493. That's 2 rough days in a row for the Hang Seng. Now, that's a drop of almost 2%, and I believe yesterday's drop was over 4%. And in the European markets at the close, FTSE down 14, DAX down 52, the CAC down 12. Now, that gives us a mixed day in Asia, a red day in the UK, and it is a big green Radio Wednesday here in the US of A. Let's go to Michael and get a recap of everything that happened this morning in the live training room. Michael, are you ready?
I'm ready. It's not going to take long.
Okay, don't.
Sadly.
I'll stand by.
Okay, because we didn't have a lot of anything this morning. I figured it was going to loosen up at 11:30, a little bit anyway.
Mm-hmm.
But I'll go through it all.
All right, sir. I'll hit mute. It's all yours, and I'll be here when you're done.
Great. Okay, thanks. Yeah, let me bring this up first. If you have not taken a free trial with us, go to the homepage at CFRN.net. Right over here on the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you will be brought to this page, eminitrainingschool.com. Now you can go directly to eminitrainingschool.com if you want to. All we ask for there is your name, your email, and your phone number. Hit the register now button. Once you do that, you will be sent a confirmation link. You must click on the confirmation link. Okay. We don't know you took the free trial until you click that link. Now, the results. Hold on, I'm trying to drag this over. Here we go. Today was a yellow day. We stopped out on our first trade. We made 2 ticks on our second trade. We made 6 ticks on our third trade. And we made 1 tick on our fourth trade. It was just nothing there today. So we made 1 tick, and it was on the NQ of all things. We took a total of 4 trades. So far on the month, we're up $1,150. That's over 9 days, averaging $127 per day. And on the year, 31,936. That's over 206 days, averaging $155 per day. Now that is 1 contract per day. Well, 1 contract, 2 hours per day. I was just looking at the NQ. There was a lot of movement on the NQ during the break. Probably was on the ES too, but I'll go through it all with you. Okay. Let's see. We started out here with gold, stopped out on the very first trade. Then we picked up the 2 ticks here that I mentioned, 6 more here, and then it just went flat for the rest of the morning session. Now, during the break, when the European markets closed, it did give some good shorting opportunities right in here. Okay. Now, these trades, like this one right here, this was not my normal trade. Went from 1039 to 1049. It was 10 minutes for those few bars. The markets today, with Powell testifying, and that is a 2-part meeting today, and probably again tomorrow. And with the other thing with the president, the impeachment hearings. The markets were just a mess today. Okay, now I didn't start looking at the NQ until we got right over here, and this was toward the end of the morning session. And I picked up 1 tick right there on the NQ. Now, after that, it was a long trade right in here. It looks like that was about it. During the break, there was a shorting opportunity right here. And there might have been a long right here. Nope. I'm sorry, it moved on me. Here. No, that wasn't a valid long. But that was it on the NQ today. We didn't do anything with the euro. Crude oil, we didn't do anything with crude, and that's odd. Now, crude had this nice run up right here, and we were watching it happen. But all the time it was doing it. It was pushing in new highs on the day. So I just had to follow my rules for not trading into new highs, unless I have enough room to move my stop to break even. So didn't end up doing anything with crude. And then look, it just flattened right out from 10:30 to 11:30. It just flattened right out. During the break, it gave a little bit of a long trade right here. Was that a good strong trend? No, but it gave a little bit of a long trade right there. All right, the ES. Now, let's go back here. The ES started out right inside a weekly trading zone here. Then it got away from it a little bit, but we didn't have a trade set up in there. It got back into it and stayed in it. And we're an hour into the morning session right here. Then it pulled away and it was just going sideways. And again, the high of the day was right here at the time. So there was nothing we could do. We were very limited today, sadly. During the break, there was 1 long trade right here. That would have been a break even. And that was it. Between the hearings and the testifying, the markets seem to be a little bit messed up. Now the NQ, during the break, the NQ had some good opportunity. Could have gotten the goal for the day on the NQ during a break. But alas, we were on the break. We were in between sessions is what we were. Okay, let me bring up the question box. Brad, I had it on a 6-tick range. Okay, you know I don't like to do that in the room. I like everything to be the same. But everybody that was in the room this morning has been there for a long time, so I'm not throwing anything real new at them. But do I think it's okay now? Yeah, it seemed to have been during the break. That's why you got to go to a different time frame with that one, because it's just jumpy. Okay, but nothing was moving except the NQ. You know, I looked at the Russell, I looked at the yen, I looked at the euro. How many bars on the NQ? It's just a six-tick range bar is what I was using. Okay, but you got to use 12 ticks risk, and that still keeps you under $100. 12 ticks risk is only $60 on the NQ. Okay, $60 per contract. Okay, and that was the morning session. So let's go back to this first. We only picked up 1 tick on the NQ this morning. Okay, it's $5, and it took 4 trades to do it. That was because we had that stop out in cold. So on the month now, we're at $1,150. That's over 9 days, averaging $127 per day. On the year, we're at $31,936. That's over 206 days, averaging $155 per day. Now, one thing that I should point out is that if you were doing like the 164s and the 137s, there was a lot of opportunity, especially the 164s this morning. There was a lot of opportunity with them. Okay. And if you don't know what I'm talking about, send me an email at support@cfrn.net and say, what are you talking about in the header? And I'll get you all the information you need. Okay. Okay, I gotta go to this thing. All right. If you have not taken a free trial with us, go to the home page at cfrn.net. Over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you will be brought to this page, eminitrainingschool.com. Here, you put in your name, your email, and your phone number. Hit the register now button and you'll be sent to confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So do that. And that's it. With that, you can pass it back out to fabulous Phoenix, Arizona. It's overlooking South Mountain, Studio A, America's largest city park. I did that in the wrong order. Dwayne, if you already, yeah. I was just thinking I was calling Studio A America's largest city park.
And sometimes it is, yeah.
That's the way it came out. I didn't mean that though.
More like a zoo.
Yeah, well, I believe
largest city, America's largest indoor zoo.
Believe me, I've got my own. I have 6.
6 what? Kids?
Animals.
Oh, same thing.
No.
All right. Just kidding.
Yeah. Well, if you add the kids in, then I have 9. But
okay, I got the charts.
You do. You do indeed.
Doke. Recap of the recap.
Today we did not get the goal for the day. We ended with plus 1 tick on the NQ. After 4 trades, the markets were just not giving it up.
Well, to say that you were slightly handicapped by the fact that Powell's testifying and the impeachment hearings have begun. Now, I was occupied this morning. I can see that we're reacting pretty favorably to Jerome, but what's come out of the impeachment hearing so far? Anything?
I have no idea.
You were occupied as well.
Yeah, I was. Wait till John gets on. He'll have information about that.
John knows it all. Impeachment proceedings.
He'll know.
And
then he never
forgets about
it.
everything. Yeah, he doesn't. Impeachment hearings so far. Well, they just had to get this done right before Thanksgiving, so give everybody a little indigestion.
Yeah.
Okay, day one, live analysis. Okay, let me scroll through this real quick and see what they've had to say, if anything. Wow, they got a lot of analysis here, a lot of talking heads. They're all out. They're all out in force. Okay, then I'm just going to go to the last comment because I can't read it all. Yeah, Micah, I agree, and I think, this is people. Oh, okay. I think Chad's point from earlier books, like it's going to be right on the money. I turned to Twitter just now, and the reaction is a lot stronger than I would have expected just sitting and watching. Not that Twitter is representative, but it shows how things will be framed. And the New York Times news alert I just got was pretty dramatic. Okay, well, let's just see. New York Times, Twitter, impeachment. Trump's Twitter war room aims at punches at decorated. All right, if somebody wants to send me that link, if you know what I'm talking about, please feel free to do so. I would enjoy that very much. I don't want to take up all the time and dig for it. Let me give you a recap of Logic 247 for the week. Valerie was kind enough to send that over. Now, there are two types of alerts. One is the Concierge Trade Alerts. That's a static report issued at the beginning of each trading session, shortly after the Globex open, based on previous price behavior, and those numbers are good for the entire session. Logic 247 is a dynamic, in the moment as opportunity develops type of alert, provided around the clock, 24/7. We start 6 p.m. Sunday evening, and we keep the pedal to the metal all the way up to Friday afternoon, 5 p.m. Eastern. You could get an alert at 2 a.m., you could get an alert at 2 p.m. It's whenever opportunity develops. And when something is developing in the moment that ties to something from the past, logic versus Concierge, two fingers pointing at the same important price, important area, it almost always deserves a second look. Okay, here's the recap. Yesterday, at this time, week 67, we had a total of 20 alerts, 1 no trigger, 10 waiting. That gave us 9 actionable alerts. 1 had been stopped out, so that was 11% of actionable alerts for this week, week 67, stopped out. Today, at noon, we have a total of 23 alerts. You can see I wasn't too alert crazy ahead of the things we just talked about. Impeachment hearings began, Jerome Powell testifying, so I was pretty light. We still have 5 waiting. That's given us 18 actionable alerts, so we've doubled that since yesterday. So far, 1 has been stopped out. So that says 0% of actionable, oh no, I'm sorry, 6. That 6 belongs on this line. 6% of actionable alerts have been stopped out so far this week. Now, let's look at the actual alerts themselves. Now, there's a common misconception in trading, especially for those who are new and just learning how to trade. That misconception being, boy, if I just had somebody to tell me when to get into the market, give me a target, give me an entry price, give me a target, and teach me how to set my stop loss, I'd be fine. That's all I need. Unfortunately, it's not all you need. I give the same alerts to people every day. All of our partners, all of our passport holders get the same alerts every day. Some of them take an alert and do quite well, exactly what you see here on the show. Others, unfortunately, take that same information, the same numbers, the same market, the same time, the same everything, and shoot themselves in the foot. How does that happen, you ask? Well, it's because human emotions come into play. If everybody traded the alert exactly the same, kind of like a robot, right, without too much thinking and too much emotion, if you just traded what was in front of you the way you're taught, that's all a robot can do, is what it's taught, you'd be okay. Now, I'm not knocking anybody, I'm not putting anybody down, because we're all chock full of ideas and emotions and all kinds of things. And what we have to learn, as important as learning when to get in and when to get out, we have to learn to put our emotions in check. Best to just leave them outside the office. Tie them up out back before you even come into work. They'll be there waiting for you when you're done. The same goes with all of your worries, your problems, your troubles, and your frustrations. Tie them up out back along with your emotions, because they won't serve you well on the trading floor. But I promise you, when you're done trading, they'll be waiting for you. Now, here's the key. If you go back out to pick up your worries, your troubles, your frustrations, and your emotions, if you have a little more jingle in your pocket than you did when you tied them up, suddenly they don't seem quite as big as they were. Money doesn't buy happiness. It doesn't solve every problem. But it puts you in an enviable position where you can now perhaps do something about the problem, the frustration, or the roller coaster ride of emotions. Give that some thought. We all put so much focus on, well, when to get in, when to get in. Getting in does you no good if you can't manage the position while you're in. If you're distracted by everything in the world that's weighing you down, you will not perform at your optimum. Okay? I look at all of our traders, all of our passport holders, as masters of excellence. That's what we're striving for. Not that we're the best, not that we're the fastest gun in town. I'm certainly not the tallest or the best looking. But by saying that master, by calling them and looking at them and wanting them to become masters of excellence, that simply means this: knowing what to do, when to do it, and then actually doing it when they're supposed to do it, without hesitation, without jumping the gun, any of those things that can so quickly topple a trader. Okay, last week, Logic 247, the entire week recap. 37 alerts, 10 stopped out, 29% of actionable alerts stopped out. Last week was, I think, our worst or second worst week in Logic 247 history. This week, week 67, we started out with an S&P trade, and a Dow, and a Russell, and an NQ, a Crude, a Gold, another S&P, a Dow, an NQ, and then the final alert from Sunday night, Crude, was stopped out. It did do the deal on the second trigger, but we only recapped the first trigger. And then Monday, S&P, Dow, Russell, NQ. That was a to the tick. Valerie's notes, Crude, Gold. Here comes Tuesday. Obviously the thumbs up means price found its target. The red X means it was stopped out. Still pending. It looks like we've got a Dow, a Russell, an NQ, an ES, a Gold, and this short here on the ES that has found its target. And so again, for this week, updated through noon, we've got 23 total alerts, 18 actionable, 6% have been stopped out, or one trade so far. Okay, pendulum swings both ways. Our average over the last 67 weeks, 66 weeks, has been 20%. Okay, as I talked, price has made its way up into this current weekly trading zone. We're on the 30-minute chart. These are the weekly trading zones. What will happen here? The last time we approached this zone was from above. We consolidated for 2.5 hours. What's going to happen here? We'll watch it and we'll talk about it. Okay, Concierge Trade Alerts for last night Got them out late last night. I apologize. 11:30 p.m. Eastern. Here we go. If you want to take a screenshot, feel free. It was late. I apparently was in a rush because I would not typically put out a long trade, a long alert at 30.95, which is a current weekly trading zone. I must have been in the process of updating my chart or something. So, yeah, my apologies. However, if you've been with me for any length of time, you spotted that right away. Whoa, Dwayne's telling me to go long at 30.95, and that's supposed to be good resistance. So good for you. You did the right thing. Now, consider being short, 30.81. That happened right here. From 30.81 to 30.78. That was the alert that I put out. That's a 3-point trade. Why only 78? Well, the zone is at 76.77. And just as we expect this up here to be good resistance, we expect this to be good support, and it was. So that at one point between the target 78 and the trade to target at 77 is simply a buffer zone. Because we do get accustomed to price turning right at the zone time and time again. But there are times when it'll come, a few ticks or even a point or two short, or it could spike it by a bit. So that's why I build in that buffer when conditions permit. Okay, so that's $150 per contract traded. We then got back above the trigger. Important prices, important areas are almost always tested. Now, you hear me say that a lot on this radio program because it's true. What you should start listening for are the times when I don't say it. I've not actually sat down and done a study, but I'm just off the top of my head. I'm going to say that at least 70% of Logic 247 alerts and Concierge Trade Alerts do in fact trigger multiple times. I think to say that 70% trigger at least twice, I think that's correct. Now, you all have access to the recaps, to the data. So if you're a passport holder and if you want to run those numbers and present it here on the radio show or something for the entire audience, that'd be fantastic. And don't worry if you come up with a number different than what I just said. Hey, I want to know the truth. So off the top of my head, I think 70% about true, but hey, maybe it's better, maybe it's worse. So anybody that wants to do the legwork on that, you have our blessing. Okay. All right, we're finding that good resistance, as we would expect. So far, we've got 14 minutes left in the life of this 30-minute candle. Now, if we expect this to be good resistance, watch what happens here. When price is on the left side of blue and climbing, the only obstacle we had over our head right here was this bearish cross. Okay. First run, we didn't make it. Second run, we sailed through it to hit the big resistance at 95.96. If price cannot get through this weekly trading zone, at least on the first attempt, what I'll be watching for, well, I anticipate some consolidation. So maybe we get 1, 2, 3 candles here at the zone. What I'll be watching for is for price to get below blue and climbing. In fact, blue and climbing, if we consolidate a little bit, will become red and falling. Then there'll be a window of opportunity back down to the BBC. Now, I will never send out an alert. I don't want to say never. I think I've done it once in the past 67 weeks. Fade the trade or counter trend trades. I don't publish those as alerts. I'm happy to teach you what they look like, how to spot them, even how to trade them if that's what you want. Okay. But from a blanket approach, Michael and I both, we only focus on the trend trades, not the counter trend. Counter trend trades are valid. They just don't have the high degree of probability that a trend trade does. Now, what that means is, let's say for this week, what did we say there had been on the logic side? 23 alerts issued this week. If I were also publishing the counter trend trades, that number I'm sure would probably be close to double, more like 46. So again, if you're a passport holder, I don't publish counter trend. If you want to learn how to trade counter trend, I will teach you. I'll caution you first, and then I'll teach you if that's what you want, because you're driving the bus. Just be careful out there. Okay? All right. And when you're pressed for time and you don't have time to wait for a trend to set up, I'm still going to tell you, find time. No, I need to trade this thing back down to the BBC. Okay, well, I'll teach you that. Just book a mentoring session. Let's go to the Dow. Okay. I think I wiped out all my zones on the Dow yesterday when I was fiddling around. So where are we at now? 27,712. Well, it just so happens we have a zone right there at 27,710/15. So there's the 15 side. I won't put them all on right now, and I know today's only Wednesday, but hey, always been a rule breaker. Passport holders, of course, had them Monday morning, 6:15 a.m. Eastern. We've published the zones every Monday morning since December 14th of 2009. So we're coming up on our 1-year anniversary. So if we come off of this zone, if we find good resistance here, just as we did on the S&P, the zone below is 27,630. Notice what happened as we pulled up into that zone last night. We found good resistance. We expect it to be good resistance until it isn't. All right, so we got 35 right here. And we'll drop a 30 below that. I'm often asked, can a person not become a partner, not become a passport holder, and just get the zones? And our answer is always the same. No, it's a family thing. And below that, we got 27560/65. Okay. So last night's Concierge Trade Alert, let's take a peek. Consider being long, 27,680. Yeah, I got it right that time. Thank you. 27,680. Come on. 27,680. Come on. /85. I'm sorry, just 27,680. And that took us up to the target at 710. So that's 30 Dow points at $5 per point, $150 per contract traded. The short side last night for the Dow, 27,580. And that's going to be right there. 27,580. It's like we hit that almost to the tick. Swing low right here, 77. We tiptoed 3 ticks over the line. Okay. Now you have to look at these triggers kind of the same way you look at a weekly trading zone. When price gets there, because it is an important price, important area, you could almost think of them as mini zones. Okay. Not as in E-mini, but as in not quite as important. Okay. Price will often walk right up to a trigger, look to the left, look to the right, sniff the air, doesn't like the conditions, and it will beat a retreat. In this case, it beats a retreat up to where we expect there to be good resistance, gathers reinforcements, and says, come on guys, let's take that target. And there we go. Boom. Right through it. Okay. So the distance from the trigger, from 80 to 65, within a whopping 15 points. But again, these zones are so close together this week, and that's not by my design. God baked this all into the cake when he created the heavens and the earth. I had nothing to do with it. He simply gave me a flashlight one day and helped me find it. He's responsible, not me. And the thing that moves price in between these areas is order flow. Again, Michael and I have nothing to do with that. It's all the buyers and the sellers that populate the DOM, which I'm gracefully dragging up. These people right here dictate the direction of the market. Not an indicator, not an oscillator, not a guru, not a crystal ball, not a tip sheet, not nothing, not no way, not no how. This is what moves price. Don't ever let anybody convince you of anything different. Okay? Important prices, important areas, of course, almost always tested. And there we go once, there we go twice. Not a big move, but it was the high probability move. Just as this was the high probability move. Okay, let's go to the Russell. Oh, well, let me just backtrack a second. I'll do this and this. When you become a passport holder, you own this indicator set for life. Okay, and once you learn how to use it, it's just like when you learn how to trade. Nobody can ever take that away from you. Think about it. How many things in life do you have that no one can ever take away from you? Okay. So we come down. We get to the trigger. Price doesn't like what it sees, so it retreats. Now, we already talked about it touching the zone, but look what it did. It pulled right back up into the BBC, bull bear cross. When we're below it, we're bearish. Above it, bullish. And that took us down through the trigger into the zone where we spiked it a bit. And then once we got back above the BBC in the life of this candle, that was price saying, hey, I'm going to the zone overhead. And it did. We consolidated. We stayed on the left side of blue and climbing. And so as we begin to build this candle, as the market saying, hey, you know what? I'm going to the zone overhead. And it did. Guidance. You not only have the entry, the target, you have guidance along the way. Okay, Russell. This little box right here, I do these at night when I'm putting together the alerts. I'll draw little boxes where I think price is going. And so last night, price was probably up here somewhere when I drew this box in. And I just haven't deleted it. But as you can see, price, it did the box, backed up and did the box again, and backed up and did the box again. Okay. All right, the actual alert, Russell, consider being short 1588. Okay, this swing high right here, 87.90. All right, so we missed the second trigger here by 2 ticks. No, 1 tick. We triggered at 1588, and we put in a swing low, 82.90. We'll call it 83. So that's 5 points at $50 per point. It's $250 per contract traded. And then price valiantly tried to get 1 tick back above the trigger so it could give us a second trade. It missed it by a tick. Well, getting above it would have required 2 ticks. It sent us right back down. And it said, let's do it again. The swing high on this time, 88 on the nose. I like to see it go 1 tick above, but It did the number, and then it came all the way back down to the zone. So from 88 to 81, that would have been a 7-point move and a 7-point move. At $50 per point, $350 per contract traded. Long side for the Russell, 1600. We've not seen that in this session. We may or may not. Quite a bit of distance to travel for it to happen. But you have to embrace all possibilities. And if I throw the indicators on, let's look for our guidance. We get a lag and a retracement. Good resistance. Sends us down through the trigger. Back to resistance. See, this played a role in not being able to get back over the trigger because that's resistance. Resistance. Now we're on the north side of blue and climbing, north side of the BBC, north of this trigger. The only obstacle we have in our path to keep us from getting to the zone overhead is right there. We're at it right now. If this obstacle turns price back down, look for another trigger and another target. If we get on the other side of this obstacle, then look for a run to the zone overhead, where when you get there, you expect good resistance. Okay. All right, that takes care of the Dow, the S&P, the Russell. Here comes gold. I don't know how I managed to delete all the zones, but I did. All right, gold, we're at 1461. We have a zone at 63.64. Current weekly zone. So there's 64. Now, if I make this look easy, it's not. It can be simple, but it's never going to be easy. I don't care what any website tells you. It's just not. But it can be simple. And if you'd like to learn simple, we'll help you find simple. That's what we do. All right, 54, 55. What happened? Okay, but let's go with those two for right now. The alert for gold last night, long 1465. Okay, yep, there's my little box again. 1465 to 67. That's what I was looking for. All right, so let me draw the line. Okay, 1465, and we hit 67. So that's a $200 per contract move. Price got back below the trigger and delivered another $200 per contract move. Got back below the trigger, and this time it only delivered a $180 move. Okay. Short side for gold. A lot of two-sided action. Whenever you see the zones this close together, anticipate two-sided action on Concierge Trade Alerts. All right, gold, short side, 1454. Okay, we've not seen that in today's market in this session. So we'll move on to the NQ. You'll notice my box did not come into play here. It stuck a foot in it, but that's about it. All right, NQ, consider being long, 82.85. We're approaching 82.85. Is there a zone there? 82, there's a zone at 82.80 / 81. So we're at the zone. Now everything that you see here, everything that I endeavor to teach you, whether it's on the show here or as a partner passport holder. There's no magic. There's no ancient secrets that we discovered in an urn in a cave somewhere in the Gobi Desert. It's all very logical. Now, it only becomes logical once you understand how markets work. And that's also what we do. We teach you how markets work. Maybe you could teach me how to put the zones on. There we go. All right, the zone below that for this week, 38.39. Okay, zone to zone, back at, well, actually, zone to zone, down to the zone. I run at the zone, back down to the zone, and then up to the zone. The alert last night for the NQ, long at 82.85. Haven't got there yet. The flip side was considered being short, 82.20. There's my box. 82.20. The swing low, 82.20 on the nose. I know I said it already, but let me say it again. You got to look at these triggers kind of like you look at a weekly trading zone. When price gets to it, it has to make a decision. Every trigger is an important price, important area. Okay? When price gets there, it's got to decide, do I keep on trucking or do I beat a retreat? Here, it beat a retreat, got to the zone, consolidated as we expect, and did not make another run at that trigger. It, in fact, headed north to the zone overhead where it found good support. Now, when an alert like this doesn't do what you're sitting there breathlessly expecting it to do, what do? I'll show you. On the way down, you sell it like you stole it. And on the way back up, when you get on the north side of the BBC, as long as you're on the left side of blue and climbing, you just got to pick your entry. You can drop to a smaller time frame. See, because here you go, well, gee, nothing ever pulled back to the BBC. Not on the 30-minute. If you go to the 5-minute, I dare say you might find a good example of that. Let's look and see. See what we can find. Turn this into an NQ. Okay. All right. So we got a zone here at 39. So we're going to look at 39 to 80. 82.39. And overhead, 82.80. Okay, so when you look at your 30-minute chart, you're on the left side of blue and climbing. Price is obviously telling you, dude, I am trying my best to get to that zone overhead. But you've been taught to wait for a pullback to the BBC, but you don't get one. You don't want to have to enter here and put your risk way down here. So if you go to this 5-minute, once the journey's underway, look at that beautiful pullback right there. Actually, it pulled back on this candle, opened here, touched the BBC at 82.55, and then just one 5-minute candle ran all the way up to 82.73. And if you missed that one, it pulled back right here. Now, the difference between here and here, on this pullback, overhead, you've got blue and climbing. On this pullback, overhead, you've got red and falling. On this pullback, you've got red and falling. See that little bitty candle right there? On the very next candle, when that thing turns green and takes out that high right there, you're in like Flynn with a minimum of risk, and you know what you're trying to get to, the zone overhead. Now look at this beautiful consolidation at the zone. That's how you do it. If you want to learn how to do that, remember I told you, knowing when to get in, where the target is, and how to set a stop. There's more to it than that. It's not easy, but it doesn't have to be hard. Let us take the hard out of trading for you by teaching you something very simple. That journey begins when you go to eminitrainingschool.com. We're so confident that you're going to like what you see. We give you everything we have, from the zones to the indicators to private mentoring. For 5 days, no credit card required. Ask all the questions you want, put on and take off all the trades you want in the simulator. Don't take our word for it. Prove to yourself that what we teach you has value. If you want to learn how to trade for a living, we can't make you a trader. I can teach how to play baseball, but I can't make you a pitcher for the Yankees. We can teach you everything you need to know to become a trader. But at some point, you're going to have to reach down inside of yourself and find that stuff that traders are made of. And it's better not to have to do it alone. Okay? All right, we got one last market here. Let's look at crude. Okay, this week's zones, 56.05. Okay, so we missed that zone by a tad. 56.05/10. It happens, but you don't have to worry about it because I'll show you in just a second why you don't have to worry about it. So 56.05/10, and then above that is 85.90. Okay. And then above that, it's 57.90. Ooh, we could have a nice run on tap here if we can take out that obstacle. 57.90/95. Okay. So the alert last night, Concierge, crude oil, consider being long 57.25. Looks like we just got there on the long side. So 57.25 took you up to 38. That's $130 per contract traded. You got back below the trigger. This time it's taken you to 57.40, so that's $150 per contract traded. On the short side, the alert was to be short 56.50. There we go. So from 56.50, we made it down to 56.20. That's a $300 per contract move. We got back above the trigger, and this time we made it down to 31. So that's $190 per contract traded. 50 to 30, yeah. If it got to 30, it would have been 200. Okay. Everything in between the lines in the sand is always the market trying to make up its mind. What's it going to do? Now you see what it did. Guidance along the way. Bearish cross here, a leg, and a retracement right to the BBC. And then a leg that took us down through the trigger. Coming back up, it's a different scenario. Okay? Here, you're looking for resistance to send you down through the trigger. Here, you've got resistance right at the trigger. So this becomes a doubly important decision the market has to make. It tried, it reached down below the trigger, but the obstacle here, blue and climbing. Now you had a flash of blue and climbing here, right? If you passed on this because of the blue and climbing, That's fair. Let it touch the trigger. Let it do it again. Now the forces of the universe are with you. The wind is at your back. You got red and falling on a short trade. Doesn't get any better than that. Blue and climbing on a long trade. Doesn't get any better than that. So question now, is crude about to make a run to 57.90? There's one obstacle in its path. As long as we stay on the left side of blue and climbing. And that one obstacle is obviously right here. So I like 57.65 up to 57.90. Is that 25 points? $250 per contract traded. I'd set my target probably at 57.85, just build in that little buffer zone. Now when you build in that buffer, it doesn't mean you can't write it into the zone if that's what it does. But if it starts to fidget, you know, right by it, they take your profit and go. Look for the next alert, the next trade setup. Okay. Has anybody seen John?
No, I have not seen John.
All right. And I didn't get a hold of Garrett. Let me just jingle John's phone and see if he's coming. Any questions, folks? Got any questions, put them in the chat box. We're happy to answer them for you. If you're struggling to learn. John, you coming on?
Yeah, right away.
Okay. All right, he's on his way. I don't think he's feeling good.
Okay.
Hasn't said anything, but I think it might be. All right, guys, any questions about anything? If you're struggling to learn how to trade for a living, okay, again, we can't make you a trader, but we can teach you everything that you know. We can put all of the tools that you need at your disposal. What we do is no magic. You know, if it looks like we're walking on water here, it's only because we know where the rocks are. Okay, and Jesus didn't need no rocks; he just walked. So did Peter till he took his eyes off of him. Everything here is 100%. By the time we're done with you, you'll understand the logic of everything that we say and do. You'll always know what the next high probability move is. I don't know that there's anybody out there that can offer you that. Or the ones who could offer it to you, they're not sharing that with anybody. That is their carefully guarded secret, because they think there's not enough money to go around. But we know that's not true. We live in an abundant universe. There's plenty of food, there's plenty of money. Food, clothing, shelter. There's plenty of it. Now, it may not be equally divided, but that's the world in which we live. But don't think you don't have enough because there's not enough. You simply haven't found your mojo, your method, and it's not trading for everybody. Imagine imagine living in a world where everybody's a trader. Well, who's going to cook the burgers? Who's going to fix the car? Hey, John, welcome to the show.
Hi. That's funny.
I try.
So, what a day. Geez.
Yeah. So tell me, John, I was occupied this morning. Has anything earth-shattering come out of these impeachment hearings?
No, I think, the market isn't buying it. That's amazing. The fact that, look, we obviously have the Fed testimony, which helped as well. And I mean, for all in a kind of a curious kind of a way, between Trump's beating up on the Fed and the Fed's accommodation, and, even, and this is very important for people to understand, it actually was potentially very bullish for the market that the Fed did raise rates when they did, because
now they can ease them.
Well, this is very critical. Raising rates is bullish for stocks because it implies a stronger economy. And sure enough, we've definitely had one of the strongest economies ever.
But the knee-jerk reaction is always negative. But long term, you're right, it is good.
Yeah. However, we reach a certain point where the Fed goes too far.
Right.
kills the market. Fortunately, they didn't do that this time.
They always forget that when you put your foot on the brake, the car doesn't stop instantly.
Yeah. They did enough damage. The problem was, look, they raised the rates, the economy did perform, but then the hangover, if you like, from the rate rise started to kind of impact the economy, especially the real estate market, which was super sensitive to interest rate rises, and especially a tenfold interest rate rise.
Right.
I don't think they really, I think, they probably were the common or garden thread, the traditional Fed, where they just raised rates without consideration for the fact that we actually had a tenfold increase from a quarter to two and a half. That was almost the nail in the coffin, if you like. But fortunately, they reversed it just in time. And not only that, trying to reduce the balance sheet was probably a big mistake, because that's why we got the correction when we got it.
Right,
but
exactly.
I'll never forget. Just a second.
All right. All right, guys. Any questions about anything? How to take the trial? How to become a passport holder? Partner? What's our methodology? How does it work? What's the 24/20 blueprint? Is it true that we have a blueprint that teaches a trader how to go from 1 to 20 contracts over a period of 24 months? Now, 20 contracts to a new trader may seem like a lot, and I'm sure to some traders it doesn't, because we all perceive the world differently. But if you're a crude oil trader, think about this. Once you work your way up to 5 contracts, how common is it for crude to make a 50-cent move? Well, you're looking at one right here. From this zone to where we are right now, that's a 50-cent move. Go ahead, John.
Yeah,
I'll pick up right there, guys. Go ahead.
Yeah, I was just saying that the fact that they reversed as quickly as they did, and in a way, what the Fed has done, it's certainly it's not just given a reprieve to this economy. I mean, in a way, they might not have been able to do it better than what they did. Corrections are inevitable. And I never forget, one of the smartest guys I have talked to, he's a floor trader, ex-floor trader. He really knows the economy and the markets very well. I remember him telling me when the Trump rally started, and we were kind of up like 10,000. He said, this thing corrects back to about 20,000 on the Dow. You just got to buy it with both hands. And this is where he said this, 6 months or a year before it actually happened, was pretty on the, spot on in what has happened since. And, we've been talking about how strong the economy looks. And I'm telling you, we're in a market today that I don't think I've almost never seen anything like it. It's not quite as good as, it's not quite as dramatic, if you like, as 1999, 2000, where it really did go wild, and there were these incredible run-ups in Amazon and Yahoo and all these stocks. But that was the sort of speculation, if you like. This is much more the real economy reflected in the value of these stocks, because as we've said all along, for these mammoth companies like Facebook, Amazon, Apple, Microsoft, et cetera, they only need 2 or 3% growth in the economy, and they just keep going on forever. They just keep growing, and obviously there's a limit to how much they can go up, but we haven't seen that yet. We're making new highs today in Apple and Amazon and Microsoft and everything else, and it's pretty amazing. So, it's actually, if the Fed, I think if the Fed had not done what it did, it's arguable whether we'd be where we are today. We might be in a better place. The Fed might have actually got it kind of right this time. The reason why I say that is because they have kind of dampened some areas of the growth of the economy might have been heating up, including the real estate market, because you don't want to get another bubble like we had in 2007 to 9, or bubble to 2007 rather, before we had a crash. So, you know, it doesn't mean to say there's another crash coming, because there will be one day, possibly in 21 or 22, like we've said, or even 20. But even later this year, you know, nothing is guaranteed. But right now, we certainly are in a very interesting market, where the you know, this work that I'm doing actually is just crazy, because it just, more than anything, and I think, you know, you've been probably preaching this for a long time, and your stuff personifies what I'm about to say. I do it in a shorter term basis, trying to get the train, hop on the train as it leaves the station. Yours, you know, a lot of your buy stops and sell stops and contingency orders sometimes look outrageous when you put them in, and they're hard to follow. But, you know, the next morning when you find you made a couple of thousand bucks overnight, or you caught a downturn that just nobody saw coming, or an upturn that nobody saw coming. Because, to be honest with you, it kind of, you know, initially this morning, the market, I actually looked at it. It was around about, I think it was coming up towards 9, or between 8:30 and 9:30. You know, the market rallied, and then it looked like it gave a sell signal.
Yeah, at 9 o'clock, John, we got this red candle. You're right. We had 3 green candles on the 30-minute chart, and this red one from 9 to 9:30. And Wall Street opened and took off.
Right, and exactly. And, you know, my thing was screaming buy, you know, and it was hard to do that because of, you know, you sort of like, because it was hard to do it because you just don't know if somebody's going to say something in this thing,
or
and
tweet
all
something,
of a sudden the market, the market tanks or something like that. So there is added risk to today. But what I've been working on in the last few days, it actually worked just fantastic yesterday. We talked about I said the J-Nug was reversing the Nugget, and look what happened, just fantastic reversal yesterday. And that was a very hard thing to catch, but I've got a way of catching these things now in the future that is very, very, like, it's a fairly consistent pattern, and it actually is a pretty safe way of entering a position with, you know, where the odds are very much in your favor that there's going to be a winning trade, and sometimes going to be a very big winning trade. Today it happened in a lot of things. You know, look, we looked at Corvo yesterday. By the way, let's just stay on the J-Nug while you got it up there. I mean, you can see it's starting to shape up a bit here. You know, I wouldn't say we're going to just rocket out of here, although we could because of what the Fed said today. I think there might be a little bit more consolidation, but we certainly have I would say, a pretty good example of an upturn developing here. It's one of the best we've seen if you compare all the upturns going back to June. It really looks, and we could be looking at something like that. What happens if, you know, we wake up tomorrow and there's a gap higher in the Nugget, and we're sort of going up like we went up in June? Could happen. So the implications are, if this flag formation, you know, holds and becomes a new up wave in gold, possibly a third wave, you're going to see a move that'll just shock the world, because the upside on this, boy, it's got to be like 150, maybe even 200 on this, given the way this thing took off. And it, you know, maybe a lot of the things that the risk of what the Fed is doing is that the economy may overheat, and you may see inflation start to pick up. Now, one of the things that's been lacking, or, you know, not confirming the gold and inflation and everything else, has been the CRB, you know, the Commodity Bureau Index. And there's all kinds of different indices these days, so it's hard to figure out which is the best. But I think that may be lifting off right now. You know, we've looked at it a few times, and it doesn't have the same kind of upside as gold yet. But as we have made a bottom in the grains. I mean, look, it's gone off, actually gone up quite a bit from the lows, and it looks very bullish. I think you have to admit that chart right now.
Oh yeah,
right.
It does. Speaking of grains, here's December beans.
Yeah, the beans are turning as we speak, and the meal is up today. I think this is the turn actually we've been looking for. Now, the other thing that's going on, and this is rather interesting, is these, when the softs, the exotic commodities, coffee, cocoa, sugar, and orange juice, all start going up together. Look at that, that's a beautiful chart, that soybeans. I think this thing's ready to rip
This is
higher.
the meal. Yeah, I can see a move from here back to 313,
it can really go.
320, and then 330.
Yep, and the meal is leading the beans higher today. That's a very good sign. And we've seen we've seen this sort of the oats and everything, but now this cocoa is just awesome. Look at it. We're nearly up to 27. We're up to 26 and 3/4, 26.75. Just a minute ago, we're up on the coffee, we're up on the orange juice, and we're up on the sugar. So these are usually harbingers of inflation to come. And the fact that we're turning higher, and maybe with the cold weather, the juice could be a big contender here.
Look at this, Dow Jones cocoa. I don't think I've ever looked at this chart. Look at that gap.
Yeah.
Is that the same thing you're seeing?
Well, I'm seeing cocoa, rocketing higher. So,
but did it gap today? This is a daily chart.
I think check it out. If you can pull up the futures, I don't know whether you get the futures on it.
Cocoa futures. Well, it doesn't show a gap, but it's this is end of day. This is end of day stuff.
I think there's a March future, March 20 future.
Well, cocoa futures. Let me try this cocoa futures. Let me just go with that continuous contract. That's not it. Oh, it's not that one. Let's try London cocoa futures.
Yeah,
that's another end-of-day chart. Who handles that data? NYMEX?
Well, we're up another 50 points. We're up another 50. So
this is the Eurex. This is the ICE exchange.
Yeah. Look at that gap on that thing, jeepers. This cocoa's on fire. There's something really major driving it right now. The coffee also has been active. Look, we had a one-day pullback yesterday, back up to the same highs again. So all in all, very impressive action from these sectors, and all of these should help. Now all we need is a grain.
When you're talking about higher prices in cocoa, higher prices in coffee, those are not necessities. Those are actually considered kind of luxury items. So does that tell us that the economy perhaps is doing okay?
I think so, yeah, because I guess discretionary, it means that people have more money. There's more money chasing
$9 cups of coffee.
Yeah, right. So all in all, and the oil is up big today, probably on the news. Well, on the cold weather and on the news of the Saudi. I think the Saudis are probably going to do whatever they can to get the price up before this IPO.
Right. There's WTI.
And actually, let me just check the energy, because I think the energy is actually acting unseasonably bullish right now. It usually is pretty weak in November, and it's because of the early winter.
Crude, John, if we can print 57.60, I'm fairly confident we'll print 57.90. So that's another 30-cent upward move for crude before we hit any real resistance. But we got to overcome this obstacle right here at 55.
Yeah, I wouldn't rule it out. I think. Look, to me, the current. We had that. Remember, we had the spike up to $70 on Brent, about $64 on the crude when the thing got attacked. That could happen again. The Saudis having some problems on the Yemen. Yemen situation. You never know, somebody might pull off some sort of a stunt here before the end of the year. That would be very bullish for gold as well, probably. And but the way we are, we're just on the point of breaking out on these energy contracts in a way that would potentially, it's sort of like looking at the market after the last correction, kind of had the same pattern. Looked like it might break down, and did the opposite, went higher, and now we're making all-time highs. So we got a potentially bullish pattern setting up in the energy sector as well. And obviously, that's obviously good for the market too. That helps. The LABU is breaking out to a new high today, a new recent high. ICPT is actually
there's LABU.
Yeah.
Daily. ICPT. There you go.
Yeah, it's look at
it's got some work to do to overcome this, but if it can break 95, and we could run back to 110, which then gives us an opportunity to fill that gap.
It's probably going to, between now, I wouldn't be surprised if this thing's up around 120 by January, January, February. And listen, if they come out with something outrageous, this thing could gap up dramatically like it has before. So, and I just look at, you can put up AGIO. No, sorry.
Did I hear Garrett in the background there?
No, it's okay. I just turned it off.
No, I thought it might have been Garrett coming in. I didn't get a chance to speak to him this morning. Okay, here's AGIO.
Yeah, it's not ready to go yet, but imagine if these, if these stocks all start recovering here, it could be very, very positive indeed. Actually, if you could put up QRVO, Dwayne, just now, today.
There we go.
Okay, we looked at this awesome kind of package here yesterday. What's the minimum you can get down to, like a 5 minute or something on that?
Yeah, we can go 1 minute, 3 minute, 5 minute.
Try and do the 1 minute or 3 minute actually.
Okay.
Yeah, 3 minute I think you have to look at. So
there we go.
Yeah, look at this this morning. This thing gapped down.
What a recovery!
Oh, unbelievable. So that was really a big, and that's kind of what happened with the J note yesterday. It kind of went down and then it reversed and then it's basically doing the same today as the J note did yesterday. So, and the thing is, when you get an extraordinary situation like this, where we're at 104, we're probably going to go to 120 or maybe even 130 because of the way this thing gapped up basically through 100. Hitting new all-time highs. It just is the way the world works. And so when you see a dip like this,
is that buy signal this morning we got, Sean, right there?
Yeah, well, sort of, yeah.
Right there.
I'm kind of getting, it's kind of, you've got it covered exactly. So, these are pretty good, when you've got the momentum is starting to pick up off a reversal like this, I think you can get in somewhere around where you could go long. What is that?
Right here.
Contender long.
This is the buy signal right here.
Yeah, contender long. You could take a shot
Consider
at it.
long.
Consider long, right. And then, you can manage it in such a way that if it starts to roll over, you get out. If it doesn't, you stick with it. So, you've got to realize that when you're in a stock that's gone up so dramatically as this thing has, why did that stock gap up so dramatically? Because the fund managers, the analysts who are covering this stock, the earnings numbers probably project this thing to 130 or 150, and that's why it's moving as strongly as it is right now. So it's always best, when you have these high momentum stocks, and it's kind of like the cocoa. I mean, I mentioned, look, I saw the cocoa yesterday. It was up 50. We're up 100 points more in cocoa than yesterday. Wow. And is
there some sort of supply side issue with cocoa?
Well, they may be, but that's why your buy stops, strategically placed buy stops, and your weekly. I think if you look at the cocoa on the chart, you're probably going to see that it took out some important weekly numbers yesterday, and you got to realize in the old days when the guys were down in the pits, what do they look at? What do these fellas look at, the floor traders? They're looking at the daily lows, they're looking at the daily highs, and when previous day's highs get taken out, they go with it. Like when a doji reversal is taken out, they go with it. When a weekly high is, and sometimes the weekly low might get broken. So what these floor traders will look at it, and if it looks like it's just going to be a nominal break and then reverse back up, that's what they do all day.
Speaking of dojis, John, I heard something yesterday, and I just barely caught it, and I didn't have it on the TV where I could back it up and listen to it again. The Dow closed with a doji yesterday on the daily chart. And the guy said that was the third time in history that's happened. I found that hard to believe.
Well, wait a minute. Third time in history? What in
that,
regards
that the
to
Dow on a daily chart closed with a doji on the day.
I don't think so.
Well, it didn't sound right to me either, and I haven't taken the time to go back and look through the charts. Maybe he said something else, and perhaps I just misunderstood him.
Well, I can tell you, go to July 20th, 1990, and you'll see something even more crazy. A double doji on the Dow, and the Dow closed the exact same price 2 days in a row. What are the odds of that happening? And that was a top. That was the top, July 20th, 1990, right before Saddam Hussein invaded Kuwait. About a few days, like 10 days later.
I see a little doji. Like there's a little doji right there.
Yeah.
So what was yesterday's candle that he found so? Yeah, obviously I misunderstood the guy.
Yeah. And listen, the reason why the Dow closed with a doji yesterday was because it had a certain amount of uncertainty before today, so it was kind of betting either way. Now
this could become the context. A bullish engulfing here means nothing because the context isn't proper. Bearish engulfing here would be.
If we get a late sell-off this afternoon, and we could, I would be I think it's probably a sell if that happens today, but at the moment it's not. So, but I think there was another doji on July the 19th, 2007. That was another weird day when the Dow read the same backwards or forwards. I mean,
really?
It was 14,000.41.
What's it called, a palindrome?
Exactly, yeah. That was 14,000.41, and that's on this show. We went short the Dow that very day, or the following day, and right after that we had about a 15% correction from the 2007 high down to was about August the 15th, I think it was, on this show, and the S&P we nailed the S&P 2 points off the low live on air. And then we rallied all the way up to an all-time high. We went up to about 14,150 by October the 10th or 11th of 2007. And then I can't remember the expression I used, but I said I'm more short than ever in my life. Literally on that day, on the day, and I put that in the newsletter as well. I even had Merrill Lynch call me and said, was I for real? And I said, absolutely. And that was the beginning of the 2007 crash to 2009. And you know what happened on March the 10th, 2009, our famous, March the 6th, where we went from being 100% short by at 3 o'clock in the afternoon. The market looked like it was starting to reverse. We were down about 150 points, and by 3:20 it started to rally. We covered our shorts at 3:20 and went long, and by 3:40 we went 100% long, and we rallied very sharply into the close and closed positive. There was a little bit of a retest on the few days later, and then after that the market took off, and has, apart from the drama we've had in between, we really never looked back from that bottom. So
let me try this. That was March. That was March, what day?
6th.
This is a pretty handy little feature right here. Wait, what did I just do? Apparently the wrong thing. So 2009-04-06. Take me away. And there it is. That's a great little feature. Guys, go to right down here on the TradingView platform. All right, back to what we were talking about. We had a 50-cent move in crude from right here, weekly trading zone, 56.90, up to 57.40, right there. That's a 50-cent move in crude. Now, that's not unusual. I mean, look at yesterday. Was there a 50-cent move yesterday? This box is 50 cent big. Okay. There's 50 cents, there's 50 cents, and there's 50 cents, and there's 50 cents, and there's 50 cents, and there's 50 cents. And you know how strict we are with anyone who becomes a partner or passport holder. We don't recommend you going live until you become consistently profitable. When you go live, you only go live with one contract. You stay with that one contract until you increase your account balance by $2,000. More importantly, what you're increasing really is your confidence. But the flip side, or the beautiful side, is that when you do add your second contract, you're adding it with profit you earned in the market. You. Yeah, go look in the mirror. You earned in the market. That's a big deal. Every contract you add after number 2, number 3, number 4, it's always added with profit you earned in the market. Otherwise, the blueprint puts you back in sim. By the time you work your way up to just 5 contracts, not 20, just 5. If you catch a 50-cent move in crude with 5 contracts, that's a $2,500 profit or loss. Depends on which side of the street you're on. Run that, do that once a day. Do that a couple times a week. Do that twice a week, it's a $250,000 a year job. But let me remind you, trading's not easy. It can be super hard, or it could be simple. It's just never going to be easy. Let us take the hard out of trading for you. We can't make it easy, but I promise you we can make it simple. I can't make you look at it simply. I can present you with simple knowledge and simple tools and the understanding of how they work and how to use them. But then you have to turn down the volume in your rat brain the way I had to turn down the volume in my rat brain and quit overthinking everything and just listen. There it is, the rhythm of the market. You hear it? I hear it. I'll teach you to hear it, even if you're tone deaf. Even if you can't carry a tune in a bucket, I'll teach you to hear the rhythm of the market. Just stay with me. Okay, John, I'm ready to go for the good word for the day. So I'm not sure where you're at on this whole project, but I got to move ahead. Okay. Yesterday.
Yeah.
John.
There is one thing that's a bit of a problem today.
What's that?
Is the transports are down, actually.
Let's have a look.
And the mid-caps rebounding, but it's actually still negative too. So, and look, we're only up $1.50 on the Nasdaq. I mean, we've had a big rebound, but you know, we're not that up as much. You know, it's kind of like yesterday. So you've got to be careful when we do have these air pocket declines and we rally up, because if we rally up and roll over, that can be a problem. It actually happened about a week ago, I think, last time it happened, and a bit of a sell-off. So, but you know, I'd say I think the Republicans put up a pretty good defense this morning, got their point across quite well, and we'll see what happens from here on. But
These transports, John, are back to good support right here. Previous swing high, previous swing high, previous swing high. Now, if this thing holds, it was resistance, resistance, resistance. If it holds as support, it would make a run at the all-time high here. Well, I don't know if that's the all-time high, but at the high, recent high.
That would be huge. The transports breaking out to the upside. Because look, if we go to an all-time high on the transports, it just extends the longevity of this bull market. And everybody, look, one of the we said this like 2 weeks ago. Remember, I said they had some sort of a survey of major fund managers, and they've got more cash than ever before. They're 27% bullish. I mean, that's probably why we're melting up right now.
But how much of that money's on the sidelines? How much of it is already at work?
No, I think there's a lot they've got cash on the sidelines.
They got dry powder, okay.
Right, and then, the thing is, as we go into the end of the year and come into the new year, there's a lot more cash going to become available. That's what tends to drive the market up.
Well, you're going to have tax selling to deal with too, but in such a bullish market, there may not be a lot of tax selling.
Right. So the other thing is I think I saw somewhere some people I don't know, but these are very look. Barring what might happen in 20, 21, 22, in terms of a market correction, we may, look, we actually said there was some very smart people came out right after Trump was elected. That 2016 bottom, they were basically projecting a 15-year bull market from that bottom, which takes us right into 2030. 2029, 2030. I would certainly keep that in mind because it looks like it's the way the world is headed. And remember, Australia has had 25 years without a recession. And it's quite possible that, we could get through at this rate that we're going at the moment. It doesn't look like there's any recession in sight for the foreseeable future. And with what the Fed just did, it may extend this recovery by several years still to come. And not only that, look, if we did have a heart attack crash in 21, for example, where the market did get down for some reason to below 10,000, and maybe gold goes up to 8,000 or something like that, I think the Fed, knowing what the Fed did from the 2009 bottom, where this would be a retest just like 100 years ago. What happened 100 years ago, the market spiked down, it got cut in half, and it recovered back up almost immediately. And the Fed stoked it up to such an extent that we had a rally right into 1929. I said before, I think what the Fed's doing right now is it's kicking the can up the road. In what they've just done over the last few months, and they're doing a hell of a job. It's working out fantastic. If we did get a shocker and we had some sort of a real scare like 2009, and maybe even a quarter or two negative growth, I think the Fed were they to come in, they basically what I'm saying is they're going to kick the can down the road for the last time. In other words, we're going to have a major adjust in the 30s, as we've said before. But kicking the can down the road, in other words, ramping up everything one final time, could give us the kind of roaring 20s of the 21st century that we had in the 20th century. So that's the way it looks to me.
All right. Well, thank you, John.
Okay, listen, thanks very much for the...
Thank you, sir.
Okay, all the best.
Have just talk to you tomorrow. Bye. All right, guys. For your consideration, right here, this window of opportunity. Now, we got to the obstacle. We're struggling. We thought that would happen. That's just logical. What we're looking for, this is key. Let price get above it on your 30. Once price gets above it on your 30, drop to your 5. Put your indicators on. Wait for that pullback to the BBC, and then ride it into the sunset. Okay? All right. Good word for the day. You hear me say often that to whom much is given, much is required. So when you decide to turn from the darkness and walk in the marvelous light, you receive a glorious inheritance. That glorious inheritance isn't just so you can sit up on the couch and eat Haagen-Dazs and watch Springer. No, God expects you to take that glorious inheritance and put it to work. And I'm not even talking money. Ephesians 1:11. Furthermore, because we are united with Christ, we have received an inheritance from God, for he chose us in advance, and he makes everything work out according to his plan. Key word, his plan. Key words, his plan. Not yours, not mine, his plan. So it would serve us all well to just get on the same page with God. Figure out what his plan is, and not fight it. Go with it. It's just like the market. Don't fight it. Figure out what the price is trying to do and then just go with it. I know it aggravates you when you think it can't go any higher, but it does, or it can't go any lower, but it does. Don't fight it. Don't question it. Go with the flow. In order to go with the flow, you got to be willing, and you got to be able to hear the rhythm of the market. If you want to know what God's plan is, read the book. He wrote a book. I'm sure you read it. Consider these words. I do not choose to be a common man. It is my right to be uncommon if I can. I seek opportunity, not security. I do not wish to be a kept citizen, humbled and dulled by having the company look after me. I want to take the calculated risk. I want to dream. I want to build. And yes, I want to be able to fail and to succeed. I refuse to barter incentive for a dole. I prefer the challenges of life to the guaranteed existence. I prefer the thrill of fulfillment to the state calm of utopia. I will not trade my freedom for benefits, nor dignity for a handout. It is my heritage to think and act for myself, to enjoy the benefits of my creations, to face the world boldly and say, this I have done. That sounds like another man who wrote, I have fought a good fight. I have finished the race. I have kept the faith. Now there is in store for me a crown of righteousness. 2 Timothy 4:7. But I'm disadvantaged, you say. Okay. Ever see the movie Rain Man? Dustin Hoffman plays a savant, a person who, in a sea of disabilities, has an island of genius. In the movie, he's incredibly gifted with numbers. Other savants have amazing abilities in art and music and, yes, even finance. The truth is, all of us arrived equipped and empowered to do something special. You have an island of genius inside of you. God has given you a gift. Believe it. Discover it. Develop it. Cherish it. Use it. Gift it. Then go out and crush it. That's what it means to have a glorious inheritance from God. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.